All right, thank you very much for joining me here today. I'm Don Ma. To start off, some China-related news. Economists are foreseeing a slowdown of growth in China, according to the latest Reuters poll. This year, China's growth is expected to slow to 4.6%. And compare that to last year, when GDP likely grew more than 5%, meeting the state's annual growth target. The world's second largest economy has been struggling to pull off a strong post-pandemic rebound. It's been weakened by mounting local government debts, property crisis, weak consumer and business confidence, and weak global growth. The People's Bank of China has pledged to step up policy to support the economy, but still, nevertheless, deflation pressures still remains a risk. Meanwhile, Chinese military bodies, state-run artificial intelligence research institutes, and universities have over the past year purchased small batches of Nvidia semiconductors banned by the U.S. from export to China. A Reuters review of tender documents show. Here's more.
Chinese military and state bodies are getting their hands on Nvidia's advanced chips, despite a US ban. That's according to an investigation by Reuters. A review of tender documents showed suppliers continue to deliver the products in China. That includes Nvidia's powerful H100 semiconductors, whose export to the country has been banned since 2022. It's unknown how the suppliers are procuring the chips, which are seen as critical to the development of artificial intelligence. But they have gone to customers including elite universities and research institutes accused of links to the military. The numbers are far too small to build a model similar to OpenAI's GPT, which would call for tens of thousands of chips. But experts say a handful could still run some complex tasks and enhance AI models that already exist. In the wake of the US curbs, an underground market in the chips has sprung up. Chinese vendors have previously said one way to get the products is to import through companies incorporated in places like India and Taiwan. Nvidia said it complied with all relevant restrictions, while the US Commerce Department didn't comment on the new report. But Washington officials have previously vowed to close loopholes in the restrictions. Analysts say the report illustrates how difficult that will be, though it also suggests that China remains dependent on advanced silicon from Nvidia, despite efforts to develop its own. Before the ban, the firm had about 90% of the Chinese market for AI chips.
Apple is offering rare discounts on its iPhones in China, cutting retail prices by as much as $70 amid growing competitive pressure in the world's biggest smartphone market. Here's the story.
There are mounting signs that Apple is under pressure in China. On Monday, its website in the country showed that it was doing discounts, a rare practice for the tech giant. The prices of some phones were cut by as much as 500 yuan, or about $70. It's all branded as a time-limited event ahead of the Lunar New Year holidays. But sales of Apple's iPhone 15 handset in China have been far worse than for previous models. Homegrown competitors including Huawei and Xiaomi are offering competitive handsets. And Reuters sources say some companies and government departments are curbing staffers' use of Apple products. That mirrors US restrictions on some Chinese products and could crimp demand. Overall, analysts say Chinese iPhone sales were down 30% on the year in the first week of 2024. Apple hasn't cut the prices of its newest models for years, but it surprised markets by not raising prices for the latest range when it was launched in September. Chinese online platforms including Pinduoduo have slashed prices for the iPhone 15 series by as much as 16% since the start of the year.
And Boeing faces a fresh delay in the resumption of deliveries of 737 MAX jets to China after the mid-air blowout of a panel on Alaska Airlines MAX 9 this month. The Wall Street Journal reported this on Sunday. Here's the report.
Boeing faces a fresh delay as it tries to resume deliveries of 737 MAX jets to China. That's according to a report in the Wall Street Journal on Sunday. The holdup comes after the mid-air blowout of a panel on an Alaska Airlines MAX 9 earlier this month. China Southern Airlines was ready to receive related but not identical planes in January. Now the journal reported it plans to conduct more safety inspections on the aircraft. The report further said China's aviation regulator told airlines to conduct precautionary safety inspections on their MAX jets. Chinese airlines do not use the MAX 9 model. The MAX 8 jets they operate lack the panel involved in the Alaska Airlines incident. The journal reported Beijing is holding off from making further big moves as it waits for more clarity from US investigations into the accident. Boeing declined to comment. China Southern Airlines and Chinese regulators did not immediately respond to Reuters' requests for comment. China suspended most orders and deliveries of Boeing planes in 2019. That followed the worldwide grounding of the 737 MAX after 2 fatal crashes.
And as tension escalates in the Red Sea and tankers avoid the area, analysts are finding that oil and gas prices appear to be maintaining for now. At least 4 tankers carrying liquefied natural gas were held up over the weekend by Yemen's Iran-backed Houthi rebels. This comes after the U.S. and Britain launched strikes on Houthi targets in Yemen. Despite being one of the most important routes for global oil trade, at least 6 more oil tankers have either diverted from or paused before entering the Suez Canal since the weekend. City analysts have found no losses so far in oil supply, but said shipping disruptions are directly tightening the market, with 35 million barrels at sea taking longer journeys. Experts say the extent of the impact will depend on how long disruptions continue because of the attacks. And the Republican-led state of Texas said it has spent more than $100 million since April 2022 to bus tens of thousands of migrants who recently crossed the U.S.-Mexico border to Chicago, New York, Denver, and other Democratic-led cities. Here's the report.
This is a free bus taking migrants from Brownsville, Texas to Chicago. The journey will take 26 hours. 1,400 miles. That's on top of the dangerous journey many migrants have already made to get to the United States. Texas, which is Republican-led, says it spent more than $100 million since 2022 on buses like this that move migrants to cities like Chicago, New York, and Denver, which are Democratic-led. Texas Governor Greg Abbott characterizes the move as bringing the border to those cities, while a White House advisor said he's using human beings as political pawns. For the cities further north, the arrivals have exacerbated homelessness and stretched social services. Reuters recently spoke with more than a dozen migrants as they waited days for buses to leave Texas. Jose Manuel is one of them. Reuters is withholding his full name for security reasons. The asylum seeker from Venezuela says his journey was difficult and long. Then he had to pass an initial asylum screening in detention.
A diferencia allá adentro estaba encerrado, me sentía como un delincuente pues porque estábamos encerrados, detenidos. No había la misma libertad que acá afuera.
It wasn't his first choice, but Jose Manuel opted to board a bus to Chicago. His journey paid for by the state of Texas.
I feel an obligation to serve people who just need a hand up, not a hand out.
Andrea Rudnick co-founded the volunteer group Team Brownsville.
We never know from week to week how many buses leave. We are told only how many sandwiches to make. Honestly, that's our indicator of how many buses are going to leave.
Some of the migrants Reuters spoke with welcomed the free buses, but had little understanding of the geography of the United States.
How do you say where they're going?
Or the winter conditions they could face at their destinations.
Chicago. Oh, muy frío.
The best this volunteer can offer Jose Manuel for his trip is a long-sleeved shirt, as they've run out of coats. Others, like Fernando Fernandez and his partner Mariela Gil, end up making a difficult decision to head to different cities. Fernandez to Chicago, and Gil to the offer of a commercial bus ticket and a temporary housekeeping gig in Florida.
Entonces, lo que espero es encontrar donde llegar, así sea en un albergue, lo que sea, y para poder trabajar, para poder tener un mejor futuro o algo, darle lo mejor a mi familia, a mi mamá, a mis hijas, y comprarme mi casa más que todo también, en Colombia, para estar tranquilo también, pero lejos de la ciudad donde estaba.
What Fernandez arrives to falls short of a hostel. Like hundreds of others before him, he initially spends weeks sleeping at a police station and would ultimately end up taking a commercial bus to Florida to reunite with his partner. Chicago is now housing more than 15,000 migrants in shelters. But spending on migrants has sparked backlash from some who say the money should be used to help low-income Chicagoans.
The federal government.
Here's the city's mayor, Brandon Johnson, speaking last year.
Our ultimate goal is to get people off of floors, those who are sleeping outside, to get them indoors, and we're doing all that while making sure we're investing in people who have already been here.
Unlike Chicago, New York is legally obliged to house people experiencing homelessness. It has nearly 70,000 people in hotels, government buildings, and tent cities. The mayors of Chicago, New York, and Denver have repeatedly pushed for more federal money to help, while trying to discourage uncoordinated bus drop-offs. They've tried to take steps such as penalizing bus companies and pushing for faster access to work permits for newcomers. That's what Jose Manuel is waiting for. As he arrives in Chicago, he's overwhelmed by the sheer scale of it all.
No, la primera impresión es que es muy grande. Chicago es muy grande, un estado muy grande y muy bonito. Pensaba que como el principio ya de Chicago, ya me comenzó a impresionar por lo bonito que es. Mucho frío.
In all, Texas has bused some 100,000 migrants to Democratic cities since April of 2022.
As 2024 gets off to a rocky start with extreme weather conditions, the National Oceanic and Atmospheric Administration is looking back at the weather and climate damage done in 2023, releasing its list of billion-dollar disasters. Here's a look at the historic year and what we can expect in the year ahead.
Severe storms, floods, tropical cyclones, tornado outbreaks, a winter storm, a massive wildfire, an extreme heat wave. In all, NOAA tallied 28 separate natural disasters that each caused $1 billion in damage or more during 2023, the most in 1 year since the agency began keeping track in 1980.
The cumulative cost was $93 billion, and unfortunately, it took 492 lives.
Of all the disasters to strike in 2023, it was last summer's heat wave and drought in the central and southern U.S. that was the most costly.
That was a $14.5 billion event. A lot of the damage was due to the agriculture, so crops, livestock costs increased, but also the Mississippi River. This was the second year in a row that the lower Mississippi River has had a low river flow, which reduces the amount of cargo that can go up and down the river.
It isn't just the physical damage to buildings and infrastructure that make these disasters so expensive. It's also lost time.
When businesses are shut down for weeks or months after a flood event or after a tornado outbreak, some of these different sector impacts are hidden, but we end up paying for them anyway.
And new federal data released Friday confirms earlier reports. 2023 was the world's hottest year on record by far.
A lot of people are looking at El Nino and viewing as 2024 could be kind of more of the same. So more heat, more extremes.
Microsoft has taken a big bite out of Apple and has become the global market cap leader, in part thanks to its focus on generative AI. The tech giant sparked a rebound for its cloud computing business by incorporating OpenAI's technology across its software suite. Meanwhile, Apple is dealing with decreasing demand, particularly in China, where post-pandemic economic recovery has been sluggish and competition from Huawei has been intensifying. Data from Friday's market close shows Microsoft's market cap hit its highest value ever at $2.8 trillion. Apple closed just under that. U.S. Secretary of State Antony Blinken, French President Emmanuel Macron, and key Middle East leaders are slated to attend the World Economic Forum, putting talks to end wars in Gaza and Ukraine at the top of the agenda for the global elite. Here's the report.
Global political and business elites are gathering once again in Davos. The Swiss ski resort hosts the annual meeting of the World Economic Forum. US Secretary of State Antony Blinken and French President Emmanuel Macron are among those expected, alongside thousands of business leaders. But the meeting has rarely faced a more tense or complex backdrop, with talks due on how to end wars in Ukraine and Gaza. One focus is whether Ukrainian President Volodymyr Zelensky will meet Chinese Premier Li Qiang during the event. On Sunday, Ukraine Presidential Chief of Staff Andrei Yermak remained hopeful.
I didn't see the final schedule of the meetings of the presidents. We know that the Prime Minister of China will be as well here. Let's see.
Zelensky will speak in Davos later in the week. As for Gaza, the White House says Blinken will bring together key players. That includes Israel's president and the leaders of Qatar and the United Arab Emirates, countries that have emerged as power brokers in the region. It all overshadows the usual economic themes at Davos, though they too look unusually complex. On the agenda will be the future for interest rates and the world's mounting pile of debt. A keenly awaited debut will be made by Argentina's new president, Javier Milei, voted in on a promise of sweeping economic reforms. But one figure looming large at Davos won't actually be there. Donald Trump was the star attraction in some previous years.
Oh no, I have great confidence in the Senate.
But is staying away this time to focus on his re-election bid. He didn't even get a mention in the WEF's annual Global Risks Report, published each year ahead of Davos. But the possibility that he might win, and the consequences that might have, are very much on the unofficial agenda.
And U.S.-listed Bitcoin exchange-traded funds saw $4.6 billion worth of shares trading hands on their very first trading day, as investors jumped into the landmark products. Here's more.
Bitcoin has closed out its first day on Wall Street. Exchange-traded funds, or ETFs, in the top cryptocurrency were trading for the first time on Thursday, and it proved to be a busy day. Around $4.6 billion in shares in such funds changed hands. That's according to data from LSEG. It all came after the ETFs were approved by US regulators. The Securities and Exchange Commission had given the green light a day earlier. That followed a decade-long legal tussle with backers of the crypto funds. SEC boss Gary Gensler still isn't a fan, calling Bitcoin a speculative, volatile asset. He said approval for the ETFs was in no way an endorsement of virtual money. Nonetheless, it's a watershed moment for the crypto sector. Supporters say the funds will make it much easier for people to invest in Bitcoin. They won't have to hold the coins themselves, but can just buy and sell shares in the funds. And eToro strategist Ben Laidler says more positives lie ahead for the sector.
We've got bank regulatory changes that are going to make it easier for banks to own crypto. I fully expect in the fullness of time central banks to start owning crypto as part of their FX reserves. All this, I think, is just the sort of gradual, natural development of what is a very young, a very small asset class.
Bitcoin itself rose around 0.7% on Thursday, buoyed by the enthusiasm. Products from BlackRock, Fidelity and Grayscale dominated the first day of trade. But other big players remain wary. Vanguard, the top provider of mutual funds, said it had no plans to make Bitcoin ETFs available to brokerage clients on its platform.
A lunar lander is expected to make a fiery touchdown as it heads back towards Earth after a failed mission to reach the moon. U.S.-based Astrobotic Technology is working with NASA to track its lander named Peregrine for its fiery re-entry. The company had to abandon its mission to be the first U.S. landing in more than 5 decades. And this is after the lander started to leak fuel. Peregrine was carrying ash and DNA, including from the creator of Star Trek, NASA experiments, and a rover from Carnegie Mellon University. Company officials expect the mission to end Thursday. The German economy contracted in 2023 due to persistent inflation, high energy prices, and weak foreign demand, but it avoided a recession at the end of the year. Here's more.
The German economy contracted in 2023, but avoided a recession. Just. Persistent inflation, high energy prices, and weak foreign demand drove the fall. Official data released Monday showed GDP shrank 0.3% over the full year, in line with analyst forecasts. Germany's Statistics Office said prices remained high and hurt economic growth. As a result, the country's economy did not continue its recovery from the sharp economic slump seen in the global health crisis. But GDP was still 0.7% higher last year than in 2019, the year before the health crisis hit. Economic performance in industry, excluding construction, fell 2% in 2023. That was due to much lower production in the energy supply sector. Household consumption in 2023 was down a price-adjusted 0.8% on the previous year. The slow pace of growth of the global economy and weak domestic demand in 2023 also hurt foreign trade, which declined despite falling prices. The German economy shrank by 0.3% in the final quarter of last year compared with the previous period. However, the Eurozone's largest economy stagnated in the previous quarter after earlier negative numbers were revised upwards. That means the country didn't quite see 2 straight quarters of contraction, the usual definition of a recession.
British luxury fashion brand Burberry warned on its full-year profit outlook for the second time in 3 months on Friday, blaming a further slowing in global demand in the run-up to Christmas, triggering another slump in its shares. Take a look.
Burberry warned investors about its full-year profit outlook again on Friday. It's the second time in 3 months the British luxury fashion brand has done so. It blamed a further slowing in global demand in the run-up to Christmas. Retail revenue over the 13 weeks to December 30th fell 7% to $900 million. The brand now expects full-year adjusted operating profit of no more than $586 million, well down from November's forecast. Markets didn't like what they heard, sending Burberry shares down over 7% after the update. The warning is a blow to CEO Jonathan Ackroyd, who has launched a turnaround plan as he tries to move the brand up market. Fashion rivals like LVMH and Kering have also reported a lower demand for high-end goods. Conflict in the Middle East has added geopolitical uncertainty to a luxury industry outlook already clouded by inflation. Shoppers in the US and Europe have also tightened their wallets, while hopes for a strong post-health crisis rebound in China were hurt by the country's property crisis.
The world's wealthiest men are proving the rich only get richer, as they have doubled their fortunes and the poor are getting poorer. A new report revealed that the net worth of the top 5 men has skyrocketed to $869 billion since 2020. Elon Musk, the head of Tesla and SpaceX, saw the greatest growth. His wealth soared beyond $245 billion. Musk is followed by chairman of French luxury goods giant LVMH, Bernard Arnault, and then Amazon founder Jeff Bezos, Oracle founder Larry Ellison, and Berkshire Hathaway CEO Warren Buffett. During this same time since 2020, the Oxfam's annual inequity report found nearly 5 billion people around the world have become poorer. And Hugo Boss shares tumbled Tuesday after its operating profit for the fourth quarter missed expectations, though sales continued to grow. Here's the details.
Hugo Boss shares plummeted by more than 9% on Tuesday morning. Investors were left unimpressed after operating profit at the German fashion house missed expectations for the fourth quarter. Earnings before interest and tax came in at about $132 million. That was below analyst forecasts. Sales did grow, however. They were up 13% in the fourth quarter at constant currency to almost $1.3 billion. Revenue in the Asia-Pacific region rose by a third during the period, with strong improvement in China. Worldwide sales reached almost $4.6 billion last year, slightly above analyst forecasts. A brand revamp 2 years ago helped the luxury group stay resilient in slowing markets like the US and Europe. Even though Hugo Boss endured a late start to the European fall-winter season due to unusually warm weather, it also boosted sales in Asia despite a slow economic recovery in China. Hugo Boss said it would publish its final 2023 results and an outlook for this year in early March.
And thank you for watching NTD Business. That's all the stories we have today. Thank you. See you soon.